Well, greetings, everybody. I've got Alasdair Macleod again on my channel, which I'm very happy to get because he is, I think, pretty well acknowledged as one of the great money and gold gurus internationally. I think I'm pretty good. I think I'm pretty clever, but I'm not as clever as he is. So it's always a good idea to listen very closely to what he's got to say. He was a city stockbroker in a previous life, as indeed I was a city fund manager in a previous life. So we are very well close to city scallywaggery and cheating and stuff that goes on in both Wall Street and the city. So we know the game. And so the more we know about the game and the more that we can share the game with you, the better it is for you to be able to protect you and your family savings. Alasdair is, as always, representative and research of gold money, but I'm going to ask him if he'd be so kind to just to just tell us all about his new stuff. He's got some new ideas and he's got a new platform. So, Alasdair, over to you. Tell us what clever stuff you're getting up to.
Well, yes, thank you for that introduction. You make me sound like a poacher turned gamekeeper, I think. No, but seriously, I think that 2024 is going to be the year of great wealth adjustment. And this is going to come, I think, in two forms. I think, firstly, I expect a massive bear market to develop in ordinary investments, such as bonds. We've already seen the start of that in bonds, but in equities, they have got so out of line with bond yields as to be really in a very dangerous condition. I think that's going to change in this 2024 year. And the second thing is that I can see the dynamics driving the value of credit down. Now, what do I mean by credit? By credit, I mean currencies. And obviously, the bank deposits that you have at a bank and other forms of credit, everything else is credit. It's becoming desperate for people to actually understand the difference between real legal money, which is gold, always has been gold ever since the Rome's 12 tables back in 550 BC. The difference between gold and credit, it's important to understand money. And this is, I think, absolutely vital. People are going to latch onto this if, as I expect, the gold price, which actually is not the price of gold, it's the value of the dollar. It's the value of gold, price of the dollar. If that goes through, goes through $2,000 and appears to be going higher, people are going to be scratching their heads and saying, what is going on here? What does this mean? Should I be involved in this? Now, from the portfolio point of view, I'd just like to make the point that less than 1% of global portfolios actually have gold in them. And gold, if you like, gold substitutes like mining shares and so on, and ETFs and so on. Now, that less than 1% is extraordinary. It is not ordinary, it is extraordinary. Normally, we would expect to see a far higher representation of gold in a portfolio. To put this into context, a 1% shift in that relationship would add 23,000 tons to global portfolios in physical gold. That's a 1% shift. And when you bear in mind that in our days, going back to the 70s, Godfrey, we had typically, you were looking at portfolios having been 10 and 15% exposed in gold. Now, those times, the 70s, appear to me to be returning. So it is becoming desperately important for people to get in on this early, even if they don't understand credit. And this is why I've set up a new Substack. This Substack channel is aimed at informing people about what money is and what credit is, the difference, the characteristics, why you should be going out of credit and hedging into gold. It's like an insurance policy against things we can see already developing, which are really quite terrifying in prospect. And this includes things like domestic monetary policy, the geopolitical shift away from the dollar towards something else yet to be defined, But a lower dollar, lower demand for dollar, lower ownership of dollar has enormous consequences for the whole of the fiat currency complex. It's explaining these things that my Substack is devoted to doing. And I would really encourage people to join, to subscribe to my Substack. I mean, preferably as paying visitors, for the very simple reason that if you are a member of something which costs absolutely nothing, you don't actually absorb the information properly. But if you do pay something, then you will read it. And that is what I want to achieve. I want to spread the education about what money is and what credit is, understanding that circulating medium which we live with every day and depend upon. Anyway, that's really the major development that I really want to work on for 2024.
Well, that's great. And of course, if you want any of my subscribers who want to look at that, everything will be on my website, so you can get in touch with Alasdair's stuff. And of course, he's already there from previous interviews, and so I do recommend that to everybody. Certainly, I follow him very closely. Lots of questions for you today. Going to be starting with some long hops, some easy deliveries which you can hook over the pavilion. Towards the end, I'm going to start tweaking some more difficult stuff, moving it off the seam a little bit more, having listened to all your stuff quite recently. Now, just not in any order of priority here. There's some things that don't seem to be in the gold price, and I very much take your point, and I've been banging the drum for a long time that gold doesn't go up, the value of fiat currency goes down, and that's a fundamental thing, which a drum I've been banging on my website for my sponsors for very many years on this kind of thing, and we both understand it. And incidentally, for those watching, Alasdair, I came together, I don't know, something like about, I don't know, 12 or 13 years ago, when I was sitting on the European Parliamentary Economic and Monetary Affairs Committee, and I got Alasdair very kindly came out to try and explain to that committee, which consisted usually of Danish housewives, Bulgarian socialists, and all kinds of flotsam and jetsam of society, which members of the European Parliament seem to represent, with the exception of myself, of course. So we've known each other for some time, and we haven't changed our views at all on anything. And in the main, of course, we've been proven right. And though there's a lot longer to go yet before we've been proved right in spades, but we are being proven right. But there's some things, there are some bewildering things. Firstly, we know that central banks are buying more and more gold. We know that to be a fact. That isn't conjecture. We know that to be a fact. We don't always know exactly how much, certainly if it's Russia and China. But we certainly know that they're buying gold in very big quantity. We also know, do we not, that the geopolitical situation at the moment, both with the Ukraine, and I've said plenty on the Ukraine, it's all there on my website for those interested, also sadly, which is coming true what I said. Now we've got the Middle East, of course.
Yeah.
That we would have expected going back to the 1970s when we were kicking around the city as young men with hair. There's no there is no real premium, as I see it, at the moment, given the international geopolitical situation, which we would have expected in the 70s, perhaps, or 80s, to be very much more marked. I mean, the world now is, I would suggest, more dangerous now than at any time since 1945.
Yeah.
Counterintuitively, the collapse of the Soviet Union actually made things more complex and more dangerous. That doesn't seem to be factored in. I'm not sure I understand why portfolios, professionally run portfolios, have such small holdings in gold. Although when I visit the city now, as I'm sure you do, Alasdair, it seems to be populated by children, and not as smartly dressed as we were, I would add as well. They don't really seem to know how many beans make five. All these things come together. But I would argue, and you correct me if I'm wrong, I would argue that the price of gold measured in fiat currencies has got a long, long way to go up yet. I think gold is cheap. What's your view?
Yes, I mean, as I said a little earlier, portfolios are so underweight as to be ridiculous. I mean, they've almost got no gold at all, and and things that represent gold like ETFs, and I think the total tonnage of ETFs is still sort of 2,500 tons, something like that. I mean, that in the grand scheme of things, when you're talking about portfolio investment totaling worldwide about $150 trillion equivalent, a couple of thousand tons of gold in ETFs is absolutely nothing. That is an anomaly. I think, Godfrey, the reason it's come about is because of regulation. Bear in mind that the compliance officers will only support, if you like, an investment case that a manager puts forward in the sense of regulated investments. Now, gold is not a regulated investment. So when you start talking about gold, the poor compliance officer, his eyes just glazed over. And he says, computer says no. And I think it's this regulation tendency. And as well as that, I mean, if you think about the position of a fund manager, he's now sort of corralled into providing a mutual fund which has three levels of risk. There's low risk, there's medium risk, and there's high risk. He's actually steered into the sort of investments that fit into those categories. And of course, gold, if you like, is the anti-credit. It just doesn't fit in with it at all. So I think it's regulation more than anything else that has driven gold out of fashion. Let's call it fashion, because investment is a fashion, and that's what we've got at the moment. I mean, we've got a fashion which is very, very heavily weighted towards technology stocks, high technology stocks, artificial intelligence. These are the things that spark the imagination of an investment manager, not a true assessment of the risk. If as an investment manager, you actually understood risk, you would probably throw in the towel, because the whole situation is just getting so difficult. And I think that's why there is so little exposure really to the anti-credit, which is really what gold is. Gold is not an investment. In fact, it is cash. It is money. It is money of last resort. It's the money you hoard. You don't circulate your sovereigns or your gold eagles in exchange for goods and services. Basically, you hang on to it until you've exhausted all your credit being bank deposits, being your credit card, being your investments in bonds and shares and things like that. All that is credit. The whole world is credit, both circulating and non-circulating. When it comes to real money, that is the physical gold. And it is so out of fashion, Godfrey. And not only that, but the regulations, the propaganda, the whole thing is just anti-gold. And that's got us to this situation, which is just so extreme. But you and I know from our experience in markets that markets can be very broken, but eventually markets actually reassert themselves over anything that governments particularly would like to see. And it's only a matter of time before that happens. Of course, the length of that time is something that we can only guess at. But I can tell you with absolute confidence that at some stage markets will reassert themselves, and the true value of credit will be exposed for what it is worth. And against that event, I think anyone who doesn't have possession of real money, some real money, will find themselves very substantially disadvantaged.
I take your point, Esther. In the late 1990s, when I was managing money, I resigned my directorships from financial service companies in about the year 2000, because I was so uncomfortable with the risk of equities, which, of course, as you rightly say, I was being corralled into by the regulatory system, which, of course, is anti-investor. It meant I couldn't buy put options on the portfolios to hedge against a collapse in equities, this in and around 1999. All right. I couldn't do that because the client had to sign low or medium risk to high risk, because the portfolio now included put options, which was designed to protect him. You try and explain that to a child who comes to inspect the books from the regulatory authorities, who's just at university, he's box ticking.
Yeah.
It's all about box ticking. And so this is, and still today, which brings me on to my next question. I suppose you will have seen in the last 24 hours, young bearded chaps in baseball caps and T-shirts leaping up and down because there's going to be ETFs in Bitcoin, who clearly, bless their cotton socks, are evangelical about Bitcoin. And I'm not anti-Bitcoin in any way. I've held Bitcoin. I've made money on Bitcoin. But leaving that aside, everybody knows I'm a gold bug and you're a gold bug. The point really is they don't understand what an ETF really is. And they are welcoming Vanguard and BlackRock and Goldman Sachs and politicians into the Bitcoin space. How naive are these young men sitting in Des Moines with $2,000 worth of Bitcoin who think this is the great way forward? Can you explain just as briefly as is reasonable just what an ETF is and why you can look up, let's say, Wisdom Tree physical silver ETF or gold ETF, it's all physical silver, but only have 20 or 30% actually in gold, which they say is in the vaults of the HSBC. So just explain that, because I can tell you there's a lot of my younger viewers that don't get it, although I've tried to explain it to them, but I'm probably not explaining it very well.
Well, there are two issues you raised there. The first is, what is an ETF? Quite simply, it is a security with an underlying objective, and that underlying objective is defined in the prospectus. Now, with a gold ETF, meant to be fully physically backed by gold, then really what you're getting is not possession of money, which we've just defined, but you're getting possession of credit, which represents money. It is not the same thing. A security is not money. The security is an investment. It is not money. So I think that's the first point I'd like to make. The second point really is that we cannot be sure that even though there is a trustee, there is a custodian, and all the rest of it, when you look at the structure of ETFs, you get a situation where this can be shorted in the market. Now, when it's shorted in the market, this basically, imagine that you're what's called an authorized participant. This is a major bank which can deal in, say, 500,000 shares of GLD or something like that. So what the bank does is it shorts GLD into the market. It borrows the stock off a pension fund. It submits that stock to the trustee or the custodian, and that stock is then encashed in return for gold. So gold bullion comes out, but you've now got two owners in effect of the same security, so that you can see that as an insurance policy against the collapse of credit, an ETF is a very compromised way of having that insurance policy in terms of ownership of real money from two points of view. First of all, the skullduggery that occurs, if you like, in the actual management of the situation and how that is used by the system. And the second point is that it is not actually physical possession of money. Now, with respect to Bitcoin, there is a further problem on this one, and that is, I would suspect that if Charles Mackay was writing his his book on bubbles today, as opposed to over 150 years ago or whenever it was, I suspect there would be a chapter on cryptocurrencies. This is a phenomenon of a bubble. It's no more than that. Now, the reason I say that is that everybody who owns Bitcoin or who deals in it believes that it's going up. They believe, on the basis of a very, very simple argument, and it's in fact a simplistic argument, that because central banks print money like, there's no tomorrow, and are increasing the rate of their printing, all you need is something which is restricted in its issuance, like Bitcoin, maximum 21 million Bitcoin, for the value of that to go up relative to the fiat currency. It doesn't matter what it is. I mean, if you could sort of come up with, say, a Nike shoe or something like that, a limited edition, then compared with, it's like saying that compared with the value of the dollar, which is going to be printed like Billio, the value of these Nike shoes are going to shoot up. It's exactly the same argument. It is an argument, if you like, of a bubble, rather than based on sense. I'd go even further than that. These evangelists really think that this is the money of the future. It is the money which is produced by people in response to the collapse of fiat currencies or the abuse of currency by governments. And so they believe that this is going to circulate as money. But they don't understand money. What circulates is not money, as we've just made clear. It is actually credit. So how are you going to issue credit on the back of Bitcoin? You need to have stability in that credit. Is Bitcoin stable in its purchasing power? No, it's not. It's incredibly unstable. So that's the first point. It's never, I mean, beyond the, those people who, sort of have religion on this, you've got really nobody else is going to use this as money. It just doesn't work. It's as simple as that. So that's the first point I'd make. There's also a legal point. If you have a painting on your wall and someone steals that, and it eventually gets sold, let's say, through one of the auction houses, and the buyer unwittingly buys it, thinking that he's got possession of that painting, he doesn't have possession of that painting because someone stole it from you. You can claim it back. This is what's been happening with all the Jewish families whose art was stolen by the Nazis in the last war. They're still claiming it back. It's their property. This is in common law. Money is different. With money, if someone steals your money, your purse, let's say, and then goes and spends it in the local shop, as long as the shopkeeper was not in any way a party to the theft, you can't reclaim that money from the shopkeeper. You no longer have possession of it. Now, that is the fundamental difference between circulating money and property in the broader sense, if you like. So, bearing that in mind, where does Bitcoin fit in this? Well, Bitcoin has a blockchain, and you can identify the chain of ownership the whole way through to you today if you actually have bought some and think you have got them locked up in your wallet. The reason this matters is that if, let us say, the tax authorities think this is the proceeds of tax evasion, or is deemed to be the proceeds of crime or something like that, what is the status of the property in your Bitcoin, which was earlier the proceeds of crime, allegedly? Do you own it or not? The answer is most likely no, because it can be identified in exactly the same way as the Rubens on your wall, if you're wealthy enough, can be identified as having been your property. So this is actually something which is going to continue and get worse and worse and worse. And I am extremely surprised that the SEC seem to be completely unaware of this. They seem to be completely unaware that there are government departments actually working on tracing how ownership of the proceeds of crime have progressed, and who has actually got those proceeds of crime now allegedly as their property. They can claim that back. Now, I think this is going to be a real problem in the future. But putting that to one side, and I would say that is the biggest warning that everyone should really consider if they're actually thinking of buying Bitcoin or buying any of these things which has a blockchain in order to identify the ownership. Do not get involved, or if you do, get out very, very quickly, because you don't want to be caught with possession of something that could have been stolen goods at an earlier time. So that's the first thing. The second thing is that, yes, this is purely a bubble. I mean, it's no more than that, because it's never going to circulate as money. You cannot create credit on the back of it, which is the important point. Can you imagine a bank running its balance sheet where it creates loans on the one side and matching deposits on the other side of its balance sheet, doing that in Bitcoin? No way. It's, this is just not going to happen. So, the whole story is basically something that Charles Mackay would call, would include in his book, saying this is a completely irrational bubble. So anyway, but nobody listens. Nobody listens because they're all out there saying, well, we're going to make billions. We're going to make money. Bitcoin are going to 1 million, 1-4. Hooray. Buy some. This is bubble mentality, Godfrey. Simple.
I think I'm right to say The Madness of Crowds is still very much in print, isn't it? I think you can find it. If you haven't read it, ladies and gentlemen, read. I haven't read it in fairness for some years, but it's on my shelf. I might reread it actually. The Madness of Crowds. This sort of actually leads me into my next question, and this is going to be something that I'm moving off the seam a little bit at you. Because your last interview, which I think it was your last one, very recently anyway, you poo-pooed, as it were, the concept of a conspiracy or conspiracy theory in much of these matters. Now, what I'd like to run past you is part devil's advocate, but not totally devil's advocate, because a lot of it is in the public domain. And it doesn't matter where you start, but I think now you have to start, not in domestic politics, you have to start with the World Economic Forum, who actually run, and this isn't a conspiracy theory because they're quite upfront. So we have a World Economic Forum agent just in this country. Let's just talk about this country for the time being. In the Prime Minister, who's totally upfront about it, the Chancellor of the Exchequer, the Archbishop of Canterbury, and the King, who signs off our legislation. They share at Davos every year the Malthusian view, the climate, I don't know, scam, hoax, call it what you like. It's certainly dodgy, in order to get hold of this power over the lives of ordinary people. And of course, if you incorporate that in the United Nations, you incorporate the IMF, you incorporate the World Health Organization, you incorporate all these things and see where the control lies. The power of the state increasing all the time, and state agents, which you might put down as big pharma are state agents, and of course, the Magnificent Seven in the S&P 500. All these pharmaceutical stocks and armament stocks are actually subsidized by the taxpayer. And the wars, the never-ending wars that we have, we move from one to the next. And of course, the neocons at Washington are responsible for this. We've seen the politicization of our police, the total politicization of the FBI, the one choice stop at elections, which is, red or blue in both North America and our country, and there's not a cigarette paper's worth of difference between the two. Now, my point is, and the central bank's goal, the digital currency thing, which everybody's up front, nobody's denying this. Nobody's denying. So I see myself as a conspiracy analyst, not a conspiracy theorist. To me, it seems that we are relentlessly going in this direction. Open borders in the United Kingdom, open borders in the United States, which can have only one result, and that is the degradation of the country with these people moving into, who we don't know. We don't know what the criminal aspect is. The suggestion that you couldn't seal the border in America and seal off the Indian Channel if we wanted to is ludicrous. Ludicrous. I could stop it in the morning if they put me in charge. If they put me in charge of the Dover Patrol and gave me free use of Royal Marines and Royal Navy tugs. This strikes me, and Europe isn't much better. Western Europe certainly isn't much better. And those who do get elected change their mind, as we've seen in Italy. So perhaps you could make a case for a chap like me, who's the chap in the pub, the man on the Clapham omnibus, why there isn't a conspiracy.
Right. In one word, ignorance. I think that it's ignorance. Well, let's go more than one word, obviously. I mean, ignorance and also a trend, if you like, a sort of social or socio trend of some sort. I mean, we see this with this woke stuff, where you're not allowed to say that there are only two sexes, for example. I mean, there is a momentum, if you like, a sort of social momentum, which bans us from views which are founded in common sense. The ignorance factor, I mean, you were talking about the World Economic Forum. The way I view Mr. Schwab is that he's a latter-day Marxist. He just basically wants to rule the world. All he seeks is an Engels. He needs an Engels, if you like, to help him. I think the people who turn up at the forum, I mean, they think it's networking, but that is the level of thinking, that you don't go any further. I don't think genuinely that people like our prime minister or ministers of state actually sort of think beyond. This is a networking thing when I've got, I can meet other leaders informally or people in industry informally. I don't think they rarely look at it beyond there. As to the conspiracy thing, I mean, you will know lots and lots of people from the European Parliament who actually had very sensible views at the same time as they had responsibility for policy. But they couldn't pursue those sensible views. Why? Because they are, if you like, they go against the grain. And if they did pursue them, they would be raising so many questions as to, if you like, disqualify them from holding power. And this is the problem, I think, for example, with central banks. I mean, central banks and their economists, the few that I've ever come across, I have found have actually been pretty sensible. But the result of all these people coming together is complete nonsense because they are driven by other factors than common sense or a sensible economic objective. I mean, we have intervention creating problems to which the answer inevitably is further intervention. And that we've gone down that road so far, it has compounded everything so that the idea that an economy works as it should work and money should work as it should, and credit be actually attached to money properly, all that's been completely discarded because that's not the direction of travel. The direction of travel is, sort of, you can't get away from it. This is the problem. So anyone in a position of responsibility, I think, if he has any sense, and some of them do, I'm not saying all of them do, but some of them do, they must be finding things very, very difficult. I mean, I just imagine, if I was on, let's say that, if I was a governor of the Bank of England or something like that, I would have sleepless nights. I really would about the situation that, that we're facing. And would I be able to explain this to the Treasury and all the rest of it? I could try. Would I get any traction? I very much doubt it. No, I mean, really, I'd probably go with the flow and collect my pension at the end of the day and maybe, the seat in the House of Lords. That is the way it works. We're all corralled into this sort of one direction, which is absolutely crazy. And that is why I think the conspiracy theory thing is actually a bit overblown. Depending how you define conspiracy, obviously. I mean, I think at the sort of Schwab level, you could say that he is conspiring to rule the world. I think most of the attendees are either just damn fools or alternatively, they're just networking. I mean, virtually every government minister in this country has been at one stage and probably still is on the list, if you like, of attendees at the World Economic Forum. So that's my response to that. I think it's a mixture of idiocy, if you like, the inability to swim against the social trends, and you know, just sort of going along with it, really. And we look at this as sensible people outside this sort of political bubble and think, you know, this is just absolutely crazy. Why are they doing this? And it's very easy to come to the conclusion that the whole thing is a conspiracy. I don't think so. I put it more down to, I mean, you cannot eliminate a conspiracy element, but I put it more down to pure incompetence.
Which brings me on to my next question, perhaps my final question, actually, for this slot. Accepting a lot of what you say, and I've made the point before that we all seem to be on a train. The electorate seems to be on a train, chugging along, desperately keen to have a day in Scarborough. But the driver, the guard, and the signalman want to go to Manchester. And it doesn't seem to matter what any of us want. We seem chugging off to Manchester, although everybody on the bloody train except the driver and the guard want to go to Scarborough. And we seem to be stuck with it. And I also had a boss, it might amuse you, I had a boss, very good man, sadly died last year. My boss in financial services, he said, I'll give you one tip. He said, the more intelligent the members of a committee, the more ridiculous will be the conclusion they come to.
Yeah, exactly.
And I found that, I expect you have in life as well.
Yeah.
Brings me on to my next question, my final question, and that is the free press. We have lost a free press. There's no question about that in Western Europe and North America and Great Britain. We have lost a free press because a lot of what we talk about when it comes to gold and debt, for example, has never, ever covered, is it, by these massive demonstrations yesterday in Berlin and Munich are not covered.
Yeah.
The huge demonstrations in Holland by farmers was not covered.
Yeah.
When did we have an election ever? Not in, don't think in my lifetime, maybe in the late 1980s, or early 1980s, when the national debt and public spending was ever a feature of an election campaign by any party in Western Europe, Great Britain, or North America. Nobody talks about the national debt, the cost of it. Now, financial journalists, of whom, of course, we both know a number, are flying fake flags, because most financial journalists haven't a clue. How they get the job, I don't know. I think a lot of them were dicked at the Christmas party by the editor. Hey, we'll make you the financial editor. We'll make you the financial. Laughable. And have you ever known, for example, if I may just digress for a moment, a Financial Times editorial ever be right about anything? Because I haven't. They've been wrong consistently now for decades, but they go on drawing their salary. Now, I would say maybe Alasdair Heath, I've had the pleasure of having lunch with, and Liam Halligan, one or two others. They know what we know, but they don't write it very often, do they? So how do we get back to a free press on all these matters, whether it's the military-industrial complex in North America, whether it's the collapse of banks and fiat currencies, which can only be a matter of time. I know the social media, and you made a note on one of your interviews that you were going to pursue social media, because that's the only way of getting the truth out of it all. But of course, they're going to clamp down on that too.
Yes. Well, you know, first of all, I quite like your train analogy, but I would amend it slightly. I think while the driver and the fireman want to take you to Manchester, I think they've actually gone up a siding with, with buffers at the end.
Fair point.
But as to the media, I mean, you're absolutely right. But the way, I mean, you know the way it works. If, let us say, you're the defense correspondent of the Telegraph, then you write your articles having had some background briefing by the Foreign Office or the intelligence services or whatever it might be. You know, you've got a contact there, you can't mention it. This is background for your article. So someone like Con Coolan at the Telegraph, basically writes stories which are fed to him by the government.
The man's a clown.
Yeah. I mean, you can, anyone with any sort of reasoning on say the Ukraine situation could see this thing was going wrong right from square one. But
if I may just interrupt for a second, it wasn't ever thus. Claire Hollingworth and John Keegan wouldn't have put up with this nonsense. And you come back to the Crimea, Russell and the Crimean War. They didn't put up with that kind of nonsense. So where have they gone? You're right, the Ukraine thing. I called the Ukraine thing day one.
I know. I
mean,
exactly.
Montgomery's last tip to the to the staff college at Camberley, somebody said from the audience, I think it was in 1946, he was the director there, he said, "Well, can you give us any tips? One last one-liner tip to Montgomery." He said, "Yes." He said, "Never march on Moscow."
Yeah.
You do
exactly.
not. I mean, I'm an ex-soldier, and I always like to boast I have possibly one of the most undistinguished military records in the history of the world. But at least I know how many beans make five.
Yeah.
So everybody seems to be. When did you last hear Laura Cheeseburger at the BBC ask a penetrating question? Never.
Yeah.
Do you know who the defense correspondent at the BBC is? I do, incidentally, but I bet you don't even know his name. He's a complete and total muppet.
Yeah.
And all these people on very big salaries, they're nicely paid.
Yeah.
How can
but going on, but the way they're trapped in this, Godfrey, and this is an idea. I mean, this is why this sort of thing is systemic rather than conspiracy. You take the defense correspondent. He gets the briefing from the unofficial briefing, as it were. Now, if he writes something which is against the policy of the Foreign Office or the intelligence services or whatever it might be, or exposes something that they don't want to have exposed, then he is merely cut out of future briefings. He is then no use to the newspapers whatsoever as a defense correspondent. So, his income depends on him going along with the system. That is why it has just got progressively more and more corrupted, if you like, so that mainstream media is now in the position where it's not getting the attention that it thinks it's right. We don't read newspapers anymore. What we do is we turn to social media. And it's the same with the BBC. And it's the same with ITV. Do we watch them anymore? No, we don't. We might watch some of the things they produce, but we do that through the app on our television. We don't actually, tune into BBC and sort of listen to the news followed by. No. It doesn't happen anymore, and particularly the young. The young do not watch television in the sense that we used to when we were their age. So the whole of the media thing has actually put itself out of business, in effect, by going along with the mainstream. I don't think, we've got to really think, what value does this media add to our lives? The answer is less and less. So just don't watch it. Don't go along with it. Don't get upset about it. It's a load of rubbish. I don't think the influence is anything like it used to be. So I would look at it in that context. I'm quite relaxed about the mainstream media basically screwing itself.
Fair point. A fair point with which I agree, but I'm Mr. Grumpy, and the older I get, the grumpier I get. And of course, I don't pay the buggers either. So leaving that aside, don't knock on my door, mate. You're not getting a check from me. So that's, as always, Alasdair, that's just fantastic stuff. I really do enjoy these, and so do my people, my followers. We've got all your details, haven't we? We've got on this new thing. We're going to get in touch with your Substack. We're going to contribute to Alasdair's, because I think it's well worthwhile. It's very well worthwhile. So do so. That's my plug for my mate who might buy me a drink at some stage on the basis of it.
Certainly, I will. Certainly, I will.
Thank you again, Alasdair. Thank you so much for coming on.
Thank you very much for having me on, Godfrey.
As most of you know, my work is very heavily independently research based. and I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I automatically share it with you. So surprise, won't cost you anything. Thank you very much.